In this video, I'm going to give you my bad sales pitch on the secret to success in making money trading stocks. If you are anything like I was as a beginner, someone just getting started in the stock market and the world of online trading, you are so focused on winning. You are so focused on how high can I get my win percentage, and just all about winning, 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 which is completely wrong. I understand. Wait a second. What? That sounds very backwards. And from a sales pitch perspective, it sounds pretty bad because we want excitement, right? If you're trying to make a sale, you want to get people motivated. You want to get people excited. But the topic here that I'm going to talk about, avoidance, is a pretty boring topic, but that's wherein lies the true secret. And I think this quote with my little edit does a perfect job of truly explaining the secret to making money. And a little warning, this all sounds like I'm contradicting myself, but just give me a chance to explain and get through the video and you'll see exactly what I mean. And just so you know, this is not being taught in theory. I recently had a trade that I'm going to use as the backbone to this, so it illustrates a very real world example. But as this quote goes on to say with my edit, avoidance is the best short-term strategy to escape conflict and the best long-term strategy to prevent suffering. Now you may be thinking, oh, you mean avoid losing money. And that would be completely false, because in all actuality, I mean the exact opposite. So what you see here is a trade that I made actually today as of the recording of this video, because I wanted to talk about all this while it was fresh in my mind. But you can see right here, I made a trade on NVIDIA and I actually shorted the stock of NVIDIA. And quick little just FYI, shorting means making money when prices are going down. So yes, believe it or not, I don't know how new you actually are, but you can make money when prices go down, and that is known as going short, shorting a stock. So I shorted NVIDIA, wanting the price to go down. However, as you can see here, I shorted it at 244.34, or excuse me, 35. It did not go down. The price actually went up, and then I had to exit out at 244.98. This is what it looked like from the technical analysis point of view, or in jargon, the candlestick analysis perspective. But I entered in right there again, thinking that wanted the price to go back down. It did not go down. It went up, and I exited the trade right there at 244.98, which then led to a loss of $315. But let's actually think about the first part of that quote. I did, in the short term, avoid some conflict. What was the conflict that was actually avoided? Well, let's take a look at the rest of the story. What happened after I got out, after I had to take that loss of $315, which is not fun. So when you lose money, it's not fun. But again, think about that quote of avoidance. In the short term, in the very near, what did I actually avoid? Was there any sort of conflict that was avoided? And again, as a reminder, I'm short, so prices going up is a bad thing. So right there, consolidated some more, and then the price started to go up, and then up some more. Took a little breath, and then, oh yeah, you get it, up some more, and then up even further. Now, I could take a worst case scenario, but I'm not going to take a worst case scenario. But let's just say, and there's very good reason for that. It's above these previous highs. So I could see, the normal person, myself, just saying, you know what, I need to just get out officially if it breaks these highs of 247. And you can see it actually went even higher than that. So my point here is these numbers could actually be even worse than what I'm going to pretend that they are. But like I said, I'm just going to be conservative in it. But from, let's just call it 245 up to 247. I mean, you can do that math. 245 up to 247 is $2 per share more of a loss. And my original loss was at 315. So if I'm losing, and just to walk you through that math, bring up the calculator here, if I'm losing $2 per share and I had 500 shares, that's $1,000 more of potential loss. So right here, this little section represents 1,000 more of a loss. In other words, I'd have to add up 315 plus the 1,000, which would give me a $1,300 loss. But that was not what happened. What happened was a $315 loss. So by managing risk, managing risk allowed me to avoid conflict. What kind of conflict? Well, in this situation, $1,000 more of conflict. But that's all about the short term, right? In the near term, you want to avoid conflict. So that what? So in the long term, you can prevent suffering, but not only prevent suffering, but let me show you the rest of the day. So what you see here was the results from the rest of the day. And when you add up all those winners, $519. One note, you may be thinking, wait a second, I thought you said you lost $315 there on NVIDIA, which I did, but I then took another trade on it, which helped me reduce the loss down to just 105. And I'm not trying to insult your intelligence here, but you get the idea, right? $519 is not anywhere close to $1,300. So my point here is this: by avoiding, in the short term, conflict, the conflict of $1,000, it was long term in this situation being defined as the day, but this applies also. Maybe short term for you is a week. And then all of a sudden, maybe longer term would be a month. So like I said, the time periods are a case-by-case basis, but in this situation, in the short term, for me, it was defined by that one trade. I avoided conflict by avoiding potentially adding another $1,000, bringing that number up to $1,300. And by doing that, it was the best long-term strategy to not only prevent suffering, but also put profit in my pocket. But again, it all started with the fact that avoided conflict by cutting the loss, which again, it sounds backwards. By losing money, I was actually able to make money, right? That's such a bad, so wait, you're telling me, Clay, that the key is to lose money. Well, not quite. The key is to lose money wisely, properly, in a risk management way. But from a sales pitch perspective, I mean, who wants to talk about focusing on losing money? It's best to talk about making money. And I am talking about making money, but again, the secret to all of this was that the fact that I had to lose money smartly in the first place. So I realized sales pitch perspective, motivation, inspiration perspective, not really fun to talk about losing money, not really fun to talk about risk management. That's boring stuff, but that's what actually matters. And that truly is the secret to making money in trading stocks. You got to actually lose money, again, wisely in order to make money. And once more, no theory here. This was all, like I said, happened to me literally the day of this recording. But I hope this helps. I hope that the title was maybe a little bit of a clickbait, but hopefully it got you to watch this, because it's hard to get, it's hard to talk about this topic. I mean, I'm sure a bunch of people have already stopped watching it because they're like, what? Avoid losing money? No, tell me how much money I can, I want to make it rain, right? That's what a lot of people are focused on, myself included, like I said at the beginning of the video when I was just getting started. But the true secret, you got to learn how to manage risk. You got to lose money in order to make money, but the exception, of course, being lose money in a smart way. So hopefully this helps. If you enjoyed this video, hit that like button, please. Leave a comment down below. And ultimately, I'd like to have you as a subscriber, but I also understand that if this is your first video, then yeah, check out a couple more videos first, and you can see how the channel operates. And if you like it at that point, then yes, I would love to have you as a subscriber. But everybody take care, get out there, and remember, got to lose money in order to make money. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.